All right, so let's see what's happening in the markets today. And today is Tuesday, September 28th. And with me in the studio is my head coach, Mark Hodge. Good morning, Mark.
Good morning, Marcus.
Geez, and then there is September. I
Yep.
mean, yesterday, September kind of lulled us in and say, all right, well, it's almost over. The new quarter is starting on Friday. And so it had a lazy Monday. So the S&P was slightly down. Let me just go to the pen here. So yesterday down 0.3%, but pretty much overall unchanged. So the Dow was a little bit up. The Nasdaq was down a little bit more yesterday, 0.8%. But overall, I mean, if we all things considered and the craziness of last week, it was kind of like, nothing. And then this morning, bada bing, bada boom. I mean, look at this. In pre-market trading, looking at the Nasdaq futures, we're down right now more than 1.5%.
Yeah, a pretty big slide. I mean, this is a big slide in the Nasdaq. And Marcus, if you go to a 5-minute chart, you see that things are just kind of going sideways, and then heading into the European session, it was just a free fall.
Yeah.
So flirting with session lows right now, trying to decide are we going to see more of a sell off at this point, or are we at lows? Who knows? But going into the open pretty weak with the Nasdaq leading the way lower.
Yeah, so let's talk about what caused it, because last week we had the Evergrande saga, right? And then we always have COVID concerns. Then we have the Fed, and then we had China cracking down on cryptocurrencies. We had, I don't know. So what's causing it today? What's the excuse for the market slide today?
The flavor of the week is bond yields.
Bond
So
yields. And we haven't
trying
talked
to
about those in a while, right?
Yeah, and I mean this is kind of a combination of the Fed and the realization, okay, something the Fed needs to do something eventually, right? And last week when the Fed had their meeting and they made their comments, it seemed like there was a muted reaction there. But bond yields have been surging really ever since, and the 10-year Treasury yield continued its climb on Tuesday, rising as high as 1.545% at one point overnight, with a bet that the Fed would carry through on its promise to curb its emergency bond buying stimulus. So that being a concern over with inflation jumping, the 10-year yield has been on the move, hitting its highest level since June, since the Fed last signaled last week that it would taper soon. So, that tapering, and then also the Fed not raising interest rates, which was totally expected,
Yeah.
but there was a little bit of a shakeup because they penciled in the possibility of an interest rate hike in 2022, followed by three in 2023 and 2024. So I think it's just kind of a combination of, yes, the Fed is getting ready to pull back that bond buying, but also interest rates are going to have to go up sometime, and next year is getting close.
It's getting closer. I mean, we're winding down the third quarter. We're going into the fourth quarter. So yeah, this is where probably this morning traders are realizing, oh shoot, it's gonna happen, right? And
Yeah,
so this is where we see pre-market that especially tech stocks are showing weakness here. So Apple is down
exactly.
1.6%. If you're looking at Netflix, down 0.7%. What else? We have Google being down. So let's talk about it. Why does it hit tech stocks the most? Why the Nasdaq? So why are the Dow stocks, the growth stocks, the value stocks are usually doing okay, but these growth stocks, why are they getting hammered?
Well, it's when debt gets more expensive, then it puts a damper on profits, right? These growth stocks are relying on growth fueling their business rather than value stocks, which are bringing in income, which are established, and so borrowing costs go up, and that's a big issue for these growth companies.
Yeah, I mean, even Tesla down pre-market trading almost 1%. We have Nvidia. So all of the tech stocks are getting hammered right now. All right. So this is the one news that is moving the markets this morning. But We have some more news, this time from Washington. What's happening in Washington today? Or
Yeah,
yesterday? What happened yesterday?
well, go figure. Democrats and Republicans can't get along. So, Senate Republicans blocked a House bill that would prevent a government shutdown and suspend the debt ceiling to avoid a potential default on U.S. debt. Now, although the debt ceiling issue will most likely be a concern over the next few weeks, I don't think that they're going to be able to pull that one off this week.
Yeah.
But the real concern is that Congress must approve government funding by Friday to avoid a government shutdown. So that's kind of the key thing here. And right now, they can't come to an agreement.
Yeah, but I mean, let's be honest. I mean, this is what we have every year. Every year, it comes down
Yep.
to the last minute, and then in the last minute, because I mean, we never had a government shutdown, did we? Oh yeah, there was one a few years back, a partial
Yeah.
shutdown. Yeah,
But it's interesting because in discussion, government policies. I'm not saying government policies aren't important, but the market's traders tend to kind of let the government policies get washed away and focus on the money. I mean, I see it all, time and time again, where I'm having a conversation with a trader, and the conversation is, "But the government," and yes, the government's important, but what's really moving the market, the Fed, big time mover of the market, and so. Marcus, I know that this week uh, we do have some Fed commentary going on.
yeah. Let's talk about it. And it's today. So today, Fed Chair Powell testifies. What is it today? Is it the banking committee? Yeah,
Click
it
on
is
that
a
little.
Senate Banking Committee
Okay.
committee. And this is at 10 o'clock Eastern time this morning. And usually there's some prepared remarks, but then there's also a Q&A. So during the prepared remarks, we already know what he says. I mean, inflation is transitory. It is okay. We'll taper it. But then he'll be grilled and during the Q&A. That could be a wild card and keep moving the markets here this morning because they are already on the move. That is for sure.
Yep. Yeah.
All right, but
So
if you look at the bigger picture, I mean, overall, yes, markets are down. It has been a crazy month. But if you switch back to a monthly chart here for a moment, then we see that this month is not as bad. Yes, I mean we moved all the way down here, but now that we're on the monthly chart, we're right back here. We are not doing too bad. I mean, we're still down for the month. Let's see. I wrote it down. So we're down. The Dow is down 1.4%. The S&P 1.8%. The Nasdaq 1.9%. But it's all less than 2% for the month thus
yeah.
far, right? And I mean, everybody has been talking about the magic 5%. We haven't had a 5% drawdown or a 5% pullback in now 225 days. Trading days, that is. So this is more than a year. So we'll see what's happening there.
Pretty crazy. Pretty
All right.
crazy.
But let's take a look at some individual stocks because we did have a few stocks reporting earnings here this morning.
Yeah, THO, the ticker Thor Industries. So the RV maker had a nice earnings beat with 4.1 or $4.12 reported versus a $2.92 estimate. So a pretty nice beat on earnings there. Revenue was also better, with the company saying that RV demand is strong with backlogs at record highs. So with backlogs being at record highs, I think that says it all.
Yeah, and I mean, this is always what market participants want to see. What is the outlook, right? I mean,
Yeah.
what are they doing going forward? And I mean, I have a Thor Tuscany. I mean, that's the motorhome that I have. I'm very happy with it. I love them. So yeah, I'm not surprised that they have strong demand. Because right now traveling is still not fun. I mean, in the airports, right? TSA is still slow. You have long lines. You have to wear
Cancellations.
a mask, right? And I mean, if you're traveling and you own your RV, it's actually fun. It's fun. You can travel the country. All right. Who
So,
else?
hey, Marcus,
Yeah.
do you know who is not in love with Mary Jane?
Who is not in love?
COVID.
Mary Jane?
Sorry. We can rewind that one. So, Aurora Cannabis. I'm
So if
sorry.
this was a got you, you got me. I've no clue.
I got you on that one. I'm sorry. Look up ACB, the ticker.
Okay, Aurora Cannabis.
All right. So they reported worse than expected earnings, with sales dropping 45% from the previous year. The company said that COVID restrictions were the real reason for the drop in sales, but ACB taking a little bit of a hit pre-market, lower than the overall market right now.
Yeah. Okay. We'll see. But let's talk about a few stocks that are up this morning because crude oil. Holy cannoli! Let's switch to a weekly chart here on crude oil. I mean, crude oil right now. Let's just zoom out. I mean, we have this one negative during COVID, where crude oil futures got negative. But I mean, they are at the highest level right now in 3 years. I mean, last time we were trading at $76 per barrel was late 2018. So right now, a 3 year high. That's strong, and this is why oil stocks are up this morning. So if you're looking, for example, at XOM, I'm switching back to a daily chart. So they're up this morning. What else? We have probably Chevron up this morning, 0.7%. I mean, bucking the overall trend here.
Yeah, that I mean, energy in general is just going crazy right now. Um, there's also natural gas jumping.
Yeah, let's take a look at natural gas futures. I mean, we talked about this a few weeks ago. I mean, I switched to a weekly chart here just so that we see how dramatic this is. I mean, natural gas futures, they're what? Isn't it like a 7 year high or something like this?
I believe so. I was looking to try and confirm that because I didn't get a chance before we started. But I mean, you just look at that chart, and it sounds like it's going to be an expensive winter if this keeps up. I know that in Britain they're experiencing an energy shortage with gas stations shut down, and
Yeah.
just it's crazy over there right now.
Jeez. All right, we'll see. Well, today will definitely be an interesting day. Hey, one more thing that I saw: two of the local Fed presidents resigned. Did you see that? So it's the
I
one, I believe, from Dallas, and then the one from Boston. And they got in the crosshairs because they were very actively trading last year. And it seems that they were buying the dip and did really, really well. I mean, wasn't it like $1 million that they traded? And so they came in the crosshairs. It was last week, and it was a little bit that with everything else going on, nobody paid attention to this. But it's kind of a big deal. I mean, if you're the Fed president and you are actually deciding over the interest rate policy and pretty much know what the markets are doing, and you're trading a substantial trading account. I mean, I don't care if you're trading like $20,000, $30,000, but if you're trading $1 million, I would say this comes awfully close to insider trading.
Yeah, yeah. I mean, I know that there's some gray area there, but at the same time, that gets a little sketchy when you're driving monetary policy for the U.S.
Yeah, so I mean they're both resigning. So the local Fed president from Boston and the one from Dallas, one of them said, "Well, I anyhow need a new kidney," which of course is true, right? So he's citing health reasons, and the other one said, "Well, I don't want this to be a distraction." You think? All right. Anyhow, hey, we're going to trade these crazy markets right now, and today will be great because with the markets down, these are fantastic opportunities for the wheel. So we will probably be on a shopping spree going into the open. And today is Tuesday. This is the day where we are trading with our mastermind. We're doing it on Mondays, Tuesdays, and Thursdays. So we're going to hop over there. If you're interested in how we trade these markets, we have a few videos popping up right now that show you the wheel strategy and the Power X strategy so that you know what we are doing. Anyhow, hey, have a great day. This roller coaster will probably continue for the remainder of the week.
Happy trading, everybody.